So I'm going to use the Term 1 2025 revision as provided by the WCD for the following revision questions. So I'm going to go to the last activity, activity 4, the partnerships and the final accounts. That is on page 13. So in this specific activity, they asked us to prepare the trading account, profit and loss, and then calculate final distribution. However, what I'm going to do is I'm going to use this to do revision on the current account note in the SFP. Okay, so note in the SFP. Right, so what are we doing when we are looking at the current accounts? You'll see different layouts for the current accounts, but the main idea remains the same. So you want to take your profit as per your statement of comprehensive income, and you now want to distribute that between the two partners. But the two partners earn primary distribution and they also earn final distribution. So primary distribution says that no matter what my profit is, or if it is that I made a loss, my partners are entitled to certain earnings. So the non-negotiables, that is your primary earnings. So they must get that. So primary distribution. Your primary distribution consists of the salaries that they might earn. Okay, so salary, they might earn a bonus. And then because they gave the business money as a startup, so for capital, they also earn interest on their capital. So interest on, not in, but on capital. Okay, so interest on capital. So all of these then add up to your primary distribution. You will also see that some of the notes have the primary distribution at the bottom. Same thing. Primary distribution is those three only for you guys. Nothing else will be included there. Then we're going to say, okay, so we've now used some of the profits to distribute as a primary distribution. But then we are going to have some profits, hopefully, or then losses left after we've given them what they must definitely get before looking at final profits. And that is then your final distribution. Final distribution. And this is the one where we will look at the ratios that they provided. Like, so how are we going to distribute this? So in other words, you take your profit as per SOCI, you subtract your primary distribution, and that will give you your final distribution. Your final distribution will be done as per the ratio provided. So this is for your current year, for your depreciation. Then you're going to see how much each one of these partners had as a total earnings for the year. So earnings for the year. Earnings for the year. A lot of notes don't have this one in here, but that's literally just adding your primary and your final distribution. And that should add up to your profit as per your SOCI, because what you're saying is that your earnings for the year is how you have now allocated or distributed the profit between the two partners. So that's another reason why you don't really see the earnings for the year in the note. Then we're going to say if we take our earnings for the year, we add that to the opening balance. So opening balance, because they might have had a balance on this account previously. We subtract their drawings for the year. It will give us our closing balance at year end. And it's this closing balance over here that you want to see in your SFP. So remember, drawings are subtracted, and then it will give you a closing balance. Okay, so your opening balance plus your earnings for the year minus your drawings for the year will be equal to your closing balance at year end. So that is your current account note within your SFP. So now let's go to the information. Right, so we've been given, first of all, a trial balance, and this trial balance, you must please go and check where your notes are so that you can follow it in a font that's a little bit bigger than this. Okay, so you've been given the pre-adjustment trial balance on the 28th of February 2021. According to this, your partners had some capital, and why this is important over here is you have to calculate the interest on capital for each one of them. So for partner 1 and partner 2. Okay, so what I'm going to do now already is I'm going to write here at the bottom, I'm going to do my calculations, and I'm going to say that capital, according to what I see now, for the one partner, the capital was 260,000. And then for the other guy, it was 200,000. So that's just taken from the information here, which means that I can tick it off. I've now used that information. Then with the current accounts here, it just says pre-adjustment trial balance. So I do not yet know if these are my opening balances or my closing balances. I would have to see moving forward. Then my drawings, those are the amounts that I'm starting out with now. But it's not to say that these are the final amounts. So same thing, I'm just going to hold on to it for now. So those are the accounts that you had to look at for your partner's capital, current account, and drawings, opening and closing balances. So for now, we only have our capital here. Right, then adjustments and additional information. Then it says your annual premium, and you have some interest, and you have a debtor, another debtor, commission, and stock take. I'm not going to look at those now because what I'm interested in is the information about your partners. So also here, rent received from a tenant, not what I'm looking at now. Depreciation, not looking at that. An employee received a salary, once again, not that. And then it has been confirmed that the business has a bank overdraft, also not going to use that now. But here, this is what I need. Okay, so it says the partnership agreement allows for the following. Each partner earns a salary of 3,000 Rand per month. Your financial statements are prepared per annum. So 3,000, not 30, 3,000 times 12, because it must be monthly. So each one of your partners are entitled to a 36,000 Rand salary per annum. Shame, not going to get them very far, hey? Okay, so 36,000 per annum. Then interest on capital is 10% per annum. However, note that one of the partners increased his capital by 50,000 Rand on the 1st of September. It was properly recorded. So remember, your financial year ended on the 28th of February 2021, which means that your financial year ran from the 1st of March 2020 up until the 28th of Feb 2021. Okay, so they are now saying that for your capital, for this one partner, they are saying that he changed his capital contribution throughout the year. And what he did is that he decided to increase it, and this was properly recorded. In other words, in the end, after that increase that occurred on the 1st of September 2020, this was after the increase, because the increase was correctly recorded. So in other words, prior to that, he only had 150,000 as capital because he increased his capital by 50,000 Rand. 200,000 minus 50 is 150. And they are saying that they earn 10% interest on their capital per annum. But he didn't have 200,000 Rand in this account for the full year, so per annum. Therefore, he can't earn interest on the full amount. He can only earn interest from the 1st of March, the first day of the financial year, up until the day that he now increased that capital contribution. And then from there onwards, he can only earn on the 200,000 from the date that he increased it up until the financial year end. So he started off with, so this is the March amount here. He started with his 150. So it's March, April, May, June, July, August. So for 6 months. It's only 6 months because he increased it on the 1st of September. So for 6 out of the 12 months, he had 150,000, which means for the remaining 6 months, he had the 200,000. So 150, earning 10% per annum, but only for 6 out of the 12 months. So 7,500. Then he increased it to 200,000, earning 10% interest per annum for 6 out of the 12 months. And that is 10,000 that he received there. So in total, 17,500 for his interest for partner number 2 there. So interest on capital, 17,500. Okay, then if we're looking at this interest one, they don't say anything about the other partner increasing or decreasing his capital. Therefore, it was only the one partner, which means that this partner's capital remained unchanged for the full financial year. So he earned his 10% interest on 260,000 for the full year. So that is 26,000. So interest on capital, 26,000. Okay, so just remember the one increased it. So he started with 150, ended on 200 because they said that this has already been recorded. And then the other one, there was no change. That's why it's just the 260 that we are using. Okay, so that means we're also done with these two. Then it says that partner 1 is entitled to an annual bonus of 20% of the net profit. So it doesn't say that the other partner gets a bonus. So there's no bonus for partner 2, but the other partner gets a bonus that's equal to 20% of the net profit. And if you then go to L, you'll see that the net profit has been provided. So to get to his bonus amount, you must take the net profit as given, and he then is entitled to an annual bonus that's equal to 20% of the net profit. So find 20% of the net profit, 42,090 times 20. So that is 8,418 that he is entitled to. The other guy doesn't get a bonus at all. And then it says that the final net profit for the year is 42,090. So in other words, your final profit, total profit, as per the SACI, is 42,090. And that is the amount that you must now distribute to these partners by first giving them their primary distribution, and then whatever is left, you will then give to them as a final distribution. How are we going to do that final distribution? The remaining profits or losses are shared equally between partners. So in other words, 50-50. So they get half of the profits. Okay, so now what we have to do is we now have to add all of our primary distributions to get our total primary distribution per partner. 26,000 So 70,418. Then for the other one, 36,000 plus 17,500, and that is 53,500. So add the two together to get to your total. 123,918. Okay, so let's quickly just do all of the totals here. So, oh, what did I do now? 36. I think I have an extra zero there. There we go. So 72,000. Only the one partner got a bonus, so 8,418. And then 26,000 plus your 17,500 for the interest is 43,500. Okay, so this is what we must now first distribute to our partners before we can do the final distribution. So you had 42,090 in profit, but then you had to give your partners as a primary distribution 123,918. So that is now subtracted from your profit, right? So in other words, you do not have a final profit. You have a final loss to distribute because you didn't make enough profits from your operations to be able to pay the primary distributions to your partners. Okay, so final distribution is your profit as per SACI minus the primary distribution gets you your final. You unfortunately have a loss that you are distributing, but luckily for them, they are sharing that equally, so divided by 2, so that both of them then get the same amount for their final distribution. Okay, so then your primary distribution plus, or then minus in this case, your final distribution gives you the partner's total earnings for this year. 29,504 for the one, 53,500 minus 49,114, and that is 12,586. So now if I add these two together, I should get back to my profit as per SACI. So remember I said that that is why a lot of the notes don't even have the earnings for the year here, because it just goes here at the top. That is you saying this is how I distributed my profits for this year. So this over here is just a repeat thereof. Okay, just a repeat. Right. Then remember we said that we must take the opening balance minus the drawings is equal to the closing balance. Right, so they didn't say anything about my opening and closing balances here. So they didn't say that these were the closing balances. So we just have to assume that these are the opening balances before taking into account the distributions for the year. And then the drawings, they also didn't say anything. So we just have to assume that the drawings, those are also final amounts, because let's just double check that we didn't have any drawings here. There's insurance, there's a loan, nothing about partners withdrawing anything. Then a debtor being written off, that's not anything for us. Another debtor, stock take, commission, so nothing with regards to drawings or opening and closing balances, rent, depreciation, an employee, and an overdraft. So nothing with regards to our ledger accounts. And then the reason for that is most probably because this wasn't actually the question. The question was something completely different. So we're going to use the balances in our pre-adjustment trial balance. So the one partner had a debit balance of 8,900. That means he had a negative opening balance because a debit balance represents a negative balance. Then the second partner had a credit balance, and that is a positive balance when we are looking at equity accounts. So done with that one. Then the first partner took 20,000 Rand. The other partner took 30,500. So drawings for the first one, 20,000. And for the second one, 30,500. Remember, it must be in brackets. Otherwise, you do not get your marks there. So now we have the negative 8,900 plus 22 to get our total. Even though they usually don't ask the totals, we will do it. Then these two added together, 50,500. Okay, so your opening balance, in this case, a negative. Let me just, where can I put this for it to actually pick up on my calculator? Okay, now I can't see. So minus the 8,900, right? That's your opening balance. It's a negative 8,900. Plus your total earnings for the year, or then if you want to look there, okay, plus your total earnings for the year, 29,504, gets you to that over there. However, you already took some stuff, and the stuff that you took was 20,000 Rand, so minus 20. So you are still entitled to 604 Rand in this current account. So started with an opening balance, added to that your primary plus final distribution minus your drawings to get to your closing balance. Then this one is going to be easier to do because of the light. Right. So opening balance was 22,100. There we have that. Plus your earnings for the year amounted to 12,586. So that's what you had available. However, you've already withdrawn 30,500, so you are only left with 4,186. So if we add the two together, 4,790, and this over here is what you will then see in your SFP if you have to do the full SFP. And that is it for a very basic current account.